It was their first earnings print. And again, this was the first of the big AI names to report their quarterly earnings. Cerberus Systems reported quarterly losses of 4 cents per share. That beat the analyst estimate for a loss of 16 cents per share, according to Benzinga Pro data. Quarterly revenue clocked in at 193.41 million. That beat the street estimate of 181.59 million by 6.5%. Cerberus reported the following core non-GAAP first quarter figures. Core total revenue of 191.3 million is up 12% sequentially and 92% year over year. Core hardware revenue of 111.6 million is up 60% year over year. And core cloud and other services revenue of 79.8 million was up 167% year over year. Core gross margins, 47%. Core hardware gross margins, 42%. Core cloud and other services gross margins, 53%. Quote, this was an outstanding start to 2026 for Cerberus, and we're proud of our achievements, end quote. That came from CEO Andrew Feldman. He goes on to say, quote, AI has moved from being a novelty to being useful and productive. Cerberus wafer scale technology delivers the fastest AI in the world. Cerberus Systems expects fiscal year core revenue of 855 million to 865 million. That's up 69% year over year at the midpoint, and core gross margin in the range of 38 to 41%. Now, I actually had two stories here that I joined together because these were both related, obviously the same stock, but also both related to the earnings print. The Cerberus, and we kind of commented on this earlier today, the Cerberus CEO also said that AI's biggest bottleneck is no longer chips. The demand is not the constraint. The supply is not the constraint. Cerberus Systems CEO Andrew Feldman said Tuesday that the biggest constraint on artificial intelligence growth is no longer chip supply or customer demand, but instead it's the availability of data centers needed to deploy AI infrastructure at scale. Speaking at the company's first earnings call, Feldman said the company is actively in search of additional capacity to deploy AI systems, describing access to data center infrastructure as the industry's most pressing challenge. Quote, demand is not the constraint. Supply is not the constraint. The constraint is data centers, end quote. Now, really quickly here, the big takeaway for me, or the thing that kind of has my ears up here, is that, we've talked a lot about some of the NIMBY stuff going on with data centers. AI is great. Everyone loves their tools. They're getting used to it. It's going to change the world, blah, 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 blah. I've heard all those bull cases. But when the data centers need to get built, all of a sudden there's a problem. Nope, I don't want that in my backyard. Nope, I don't want that clearing pristine nature area. Got to be very selective about that. Now, Cerberus CEO telling you that those are actually the constraint. It's not even the chips anymore. Technology companies have been continuing to invest billions of dollars into AI infrastructure, while data center operators race to secure power, land, and construction capacity to support new facilities. Oh, that's right. I forgot to mention the power issues for data centers. Feldman said Cerberus is searching globally for additional data center capacity, with discussions spanning markets from France and the Nordics to the UAE, India, Middle East, Singapore, Australia, and Indonesia. No word if he's looking for low Earth orbit. Quote, we have new data centers coming on board in Q3, Q4, Q1, Q2, Q3, Q4 of next year, and we are adding more. We're in discussions with literally dozens of different data center owner operators, end quote. Feldman's remarks underscore a broader shift in the AI industry, where attention is increasingly moving from chips to the infrastructure required to deploy them. I also want to point out that months and months ago, Tim Melvin and I did a webinar at night. I actually think we commented on this in the morning show as well. We'll ask him when he comes on here. But Tim Melvin and I did a webinar where we sat the group down and we said, listen, I know the hyperscalers are getting talked about every single day, but we're in phase 2 of AI, and phase 2 of AI is infrastructure. And that is exactly what we are hearing from the AI companies themselves now. So put on your party hats, because that was another incredibly accurate and timely call from Mr. Melvin. Goldman Sachs expects global data center demand to increase 50% by 2027 as AI workloads consume a growing share of computing capacity worldwide. The build out is already accelerating, with Meta Platforms, ticker META, outlining plans for multiple multi-gigawatt AI clusters as competition among technology companies intensifies. So data centers are still the word, folks. They are still the word. And that is going to be, you're going to hear about this. To me, this kind of confirms the whole SpaceX, Tesla, Elon, data centers in space story, right? If this is the constraint and we need more of them, and people don't necessarily want them in their backyard or near them, or impacting their power bills, all of that's understandable. If that's the case, got to put them somewhere. Low Earth orbit has its pros and it has its cons.